Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Thanks, Barty. Thank you, Seabass. Or Seabus. How we doing in YouTube? Thanks. All right, good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. This stream is about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. There are a number of streams using this process out in the ether, in the internet world, and YouTube, and also there is a library that is curated of streams that have been previously done, some of them up to 5 hours long of real-time narration. So if you want to see this process unfold in many different market configurations, you're all invited to the Bookmap Discord Trader Lab community. There's no cost. And not only that, but the structured trades you see here in the stream, which are only part of what is available in the Trader Lab community, are also part of 60 PDFs that you can download and then reverse engineer, and not to mention the Trader Lab community, which is a group of like-minded traders with a diverse experience and time in the business, from newer, and our senior trader has over 50 years. I've got 45 years, both professionally and now out here in the retail space. And there's a lot of really good traders in the Trader Lab. And the thing about it is we share, we leverage, we work together to get better. This is a lonely business, and unless somebody's been in the business, they have no idea what this is, the reality of it is. So if you're interested in being in a group of traders who've been in your shoes, walked there, done that, and are still working to developing and get better and determine if they can actually do this business from a career point of view, the way you look at the business, in my opinion, is a gaming process. Statistical probabilities, metrics, not prediction. So let's look at what that means. Let's see how that might manifest itself, but we have to take care of a little of the business. First, general disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this isn't a trade calling room, but if we get there, we'll talk. Now, let's go take a look at a couple of things here. Incidentally, this is what the 60 PDFs look like. They are available to everyone. There's a link in the bottom of YouTube if you're inclined. These are this is real trades that I've taken, and I posted them because traders are asking me, what are you doing? Because it might be a little different than most retail traders do. And there's 60 of these, so you can download them. I just want to mention that to you in case I don't get back to it. So let's move on. Now, this is something I posted in the Trader Lab. Now, see if this is something that might help you out. And what I've been stressing, and I always stress to Trader Lab participants, and I've done a series of webinars, they're out there. It's trade plan, and it's a sequence of 3. So what is a trade plan all about? The trade plan is about knowing not what the market will do, because we can't know. Why don't you write that down? The behavior of the participants and the interaction is random. What we can do is anticipate in order to participate. So this is a trade plan. Now, by trade plan, what I do is I don't necessarily say, here's a plan. I say, here's what the market might do. There's a couple scenarios here. Let's write those scenarios out, maybe even draw a little graph with key levels on them. And then depending how the market might manifest itself, and does not have to do any of this, or, then we might give us an edge to then operate because we already know the levels that are material. So let's look at this. We are under 60. Now, those of you who followed the stream, you remember 60 was a target coming down yesterday. It just happens to be yesterday's low. And again, I always say, well, what's the best you have in this? Maybe. So we have yesterday's low at our primary target, and then we had a tertiary target further below. Okay? Neither here nor there. It just sits. And this was the next target below, 45-ish. So now let's look at another piece. Very interesting here. This was called the naked volume point of control. This is the highest volume price from yesterday. So isn't it interesting? Yesterday's low is here. The highest volume is there. Now, in the auction world, what this means is, in an intermediate time frame, this is the retail price. And if it's too low, we can go the other way, which we did yesterday. And then we went higher. Yesterday's high is above us. And this was the highest retail price in yesterday's RTH. And so you understand, the auction is a shopping thing, and it's very much like shopping. So what's too high, what's too low, what's just right, or retail. Same thing you do in the store. And where buyers and sellers do most of the volume is where there's agreement on a fair price. Well, the thing about our auction, or how the market works, is that valuation, or that discovery of fairness, is continually changing in all fractals and time frames. So this was the retail price yesterday. So now I'm going to read you the scenario, but I'm pointing out these levels so you understand. The ETH high was right against this price. This is the last auction, the ETH. If it's too high and we move away from it, then we know if we're below 60 and we're below this, that maybe this is too high and maybe 60 is too high. So let's look at the scenario. This is posted 6:35 a.m. Central Time, so obviously before RTH open. Now, at the time, we are under 60, so this is material. 45 naked volume point of control and overnight low have potential. So 45 is here, overnight low. 58.32, which is down here, has potential as a target. And let's see what else. 58.2875 also. Overnight high is yesterday's VPOC. What might that say? So if we clear 60 to the upside, which you will see here, then 70, another ETH target. Market is balanced but leaning short at the moment. Be cautious today. The market seems to be waiting for new inputs, reports, and of course the election. Manage your FOMO. Be patient. If you do not have a trade, don't trade. Yesterday only had several opportunities, and those were shorts, if you remember, mostly, and maybe one long. How many times did you trade yesterday? Review yesterday's stream. If you haven't, this business is not about action. It's about edge. No edge, no trade. So now let's look at the opening trade. Now, RTH open, 8:30 Central Time, my time. Now, I did a specific webinar on trade planning, pre-market preparation, and then execution, 3 in a series. It's in the library in the Trader Lab. Now, this is a specific scenario. This is called VPOC migration. This is an advanced concept, and what makes it advanced, it's an opening trade configuration. It is fast. You have to have a lot of intentional practice to be able to execute in a timely fashion. And it is a high-risk area. And I always suggest, don't trade here. Learn. Because when you understand this is language. So we're not using indicators per se to say get long or get short. We're actually using participant behavior. And this is where Bookmap comes in, because we're looking at the order flow. So here's the RTH open. Now I'm going to show you the first trade, at least the one I took. So this is called the variable high volume node. Now, remember where we're opening. So right here, let me make this a little larger. Here's our RTH open. Now remember, we're opening below 60, below the overnight mid, and below yesterday's low, which is 60, by the way, right here. So the possibilities are the following: go up, fill the gap, or since we're below 60, which is a key level, south of the border, and then here, here, and here. This is a low volume node, an outside edge. So this is also a target. So let's just see the behavior. So now it's who takes control of the ball. Well, we know we have a gap, and we know there's shorts in the market from yesterday. So if there's shorts in the market and we get a gap, we might get additional selling. This is part of market mechanics. Now, here's the next thing you need to be thinking of, in my opinion. If we get a gap and we get new shorts, and subject to wherever, and remember, we don't know where the market's going to go, and subject to if we reverse, then those shorts become buyers, and then the shorts from yesterday can become buyers, which is why we're currently on longs. But let's talk about the short. So, market, I see the seller here. This is my retail price. Yellow line represents the high volume. Remember the shopping experience. So I have a seller here, and I get a rotation. I get my sellers here. I'm above this seller. This is absorption. I got absorption here. Sellers are here. This is the ETH. Sellers are here. You can see we're going down. We're going down. We're going down. Had some buyers here. Come back here. Going to the moon. Not quite. Buyers here. Buyers here. Where were the sellers? Here, here. Don't know. Sellers again. I want to get short. Let me show you. Right here is where our buyers were. Right here is a test of the retail price. Right here is where it is too high and the sellers are. Now, this is very aggressive, but now I'm going to show you. Well, what I did is I got in here because this ran away on me. So actually, I put an order in and it didn't get filled. So, thanks. So now I get this little microstructure here, which is right there. Let me show it to you. Now, this is also called trading in fractals. So what I have is the acceleration, the pause, and the buyers take a shot here. So as soon as I see these buyers, I now have what's called a micro high volume structure. So right here, this is my short, and then I put my stop above here. Now, VPOC, now this is my first target, 45. Remember, the targets from yesterday, 60 and 45. Well, not yesterday. What's wrong with today? So this is my first target. This is my short. This is my scale. Now I have two targets below, and all these were posted in TraderLab. Well, this one, I don't think I did post, but it's a low volume node, and then 32. Because there are stops down below us under some previous RTH days. And if we got under them, this was my target. So I had an order sitting out here. Okay? Just telling you. So now, this is called VPOC migration. This is the new retail price. This is saying, and this is language, remember, I don't use any indicators. So what I found was I'm really more interested not in backwards looking and potentially conflicted indicators. I found for me, and it's just me, I want to actually do the translation myself. I don't want some backwards looking moving average derivative or something telling me what's happening when I can see it here or I can see it in here. And that's what order flow is about. So I don't use them. Doesn't mean you can't. I don't. And the other thing I found, and this is in the primer webinar, at least for me, I used to have everything on here but the kitchen sink back in the day, and also trading systems that I built. And so everything was all math-based and, quote, indicator derivative-based and optimized, in systems. Over time, what I found was I was always trying to fit the market into something that happened in the past. Now, of course, the past is relevant, but what does this right now have to do with what happened 2 days ago or last week? Okay, it does reflect what happened yesterday, and it does reflect the open. So here's developing volume point of control, new retail price. So I'm going to mark it. Watch. And this is called VPOC migration. Now, what I do is I track the retail price. Remember, this is shopping. So if I come out here and then I can break below this, it is saying at the moment too high. So going down, feeling good, Lewis. Doing the Acapulco cliff dive. Now, right here, now I'm following this, right? Let's look at how we might follow this. The micro high volume structure, and I'm just going to draw a little of this for you. What is this? The chop, chop, chop is a consolidation. That's what's going on over here. Chop, chop, chop. Chop, break low, test, too high, break, fractals. This is too high. This is too high. Lower. Right here. Too high. Test. Too high. Test. Sellers are here. Too high. Looking good. Going to zero. Here's more volume. Right here. Sellers are below. Come back and test. Too high. I'm putting another little line there. What are these? These are fractals of that. If this is the developing time frame, this is the highest retail price because this is where the volume is. But as I go down in quote time frame or structure, these little high volume nodes are actually consolidations. There's high volume. If I come over here, there's high volume and there's the volume there. You see how they match up? Now I come down here. What do I have here? High volume. So what I do, and I don't have to draw these lines, of course, I just look at this, but so you could see what does it mean? See, the thing about, I think, interpreting the market is not letting your indicator tell you anything. At least that's me. I want to know what's happening here. And when I get my seller, I want to see, because this is resistance. And that's where it is right there. That's shopping. So if this is the seller, and the sellers are up here, and the sellers are here, and the sellers are here, and the selling icebergs are here, if I come back here, if I can stay below this, then that's good for the short. I break here. I need to stay under here. This is resistance. Now what? Now I have more volume starting to fill in over here. There it is. So this is a chop, chop, chop is an auction. Too low, too high, too low, too high. And then it will resolve itself. Sellers take control here. Too high. There's my resistance. Now I come down here. Sellers are in control. This is now too high. This is resistance. So I'm going, okay, come on. Where am I trying to go? 32. That's where my order was sitting. And then I get a change right here. This is now too low, and this is resistance. This is resistance. So let's just see what happens here. Watch. So I come up. Now, right here, I'm still gunning for 32. So I see this, and I'm going to tell you, my teeth started to chatter when I saw this one. Because I'm going, maybe you should, have you ever had this thought? Maybe you should have got out. Well, at this point, I'm under this, I'm under the VWAP, I'm under the mid, and I had a counter rotation. Okay, and I get my buyers here. What is this up here? Micro high volume, and I break right here. So my stop is out here. I'm all the way out here, but I'm gauging. So right here, I think I'm actually having this conversation. Why didn't you get out? Have you ever had that one? Well, I have it all the time because hindsight's very clear. So anyway, we break down, and now I'm going, okay, now we're below this, and I'm going to 32. I'm under this. I'm under this. See the test. I break here. There's my test here again, resistance. So I think we're going lower, right? VPOC migration. This suggests to me 32, come on. This is the VPOC migration. This is saying this is too high. So I'm thinking I'm in good shape. And I was up until this. So right here, this is now the new retail price. That's too high. So what this needs to do right here is push off. Instead, it does the opposite. This is a change in condition. And what the condition becomes is something called, there's two possibilities. Outside in, mean reversion, or this is too low and we come across. So we have to see. This is resistance right here. Right here, I took a short. And I'm looking for it to come here and to go down to 32. I took a stop right here. Very excited about that. So what I did was I covered on the cross and then just put it back out again. And that didn't work. Okay, so I took a stop. Okay, then you grit your teeth. Now, something else I observed. I was watching, I saw this and I come back here and I'm thinking, that wasn't such a good plan, right? Maybe you should have, shoulda. I got to tell you, in hindsight, you should have what? Sold the high, bought the low. Isn't it clear? So now I'm going into rotational trade. What I was looking for here was this to this. What I got was that back to here. So now I'm in rotation. And I'm noticing the selling, but I also noticed that there's a lot of selling, but the buyers seem to be doing a reasonably good job. So I come out here. So this is mean reversion, outside in, and then outside. So let's watch. Outside, break high, VPOC migration. This says potentially this is too low. I also tagged this is the mid, this is the VWAP, and look at the buyers. So it's contested, but this now might be support. So let's take a look at it. So in the Trader Lab, there's two ways to play this. Here or here for a long. And then what you're looking to do, and the reason for this, and this is VPOC migration. Remember, I did a specific webinar on this, and everybody takes stops, part of the joy. It's overhead and cost of production. Casinos also pay to gamblers. So, too low, retail. Too high, come underneath. Where's too low? Wouldn't we all like to know? Don't know. But this is called mean reversion. And then with the outside, I know this is support down here. When I come back above, then I have resistance here, retail is here, and I can still come out here. This is VPOC migration. This changes everything. Now it's a long, and the possibility is we have statistics. Fill the gap and 60. You remember that, right? That was our support from yesterday. So this is the next target. So the long to 60. And then at that point, and you got the settlement up here. So this is the primary long. And then you can get above that, then there's more. Settlement, naked volume point of control, ETH high. So we can come back to 70 if we get there. I don't know if we did. Did we? Oh, yeah, we did. Yes. So these are the targets coming up. Here, 60 and 70. So let's watch. VPOC migration. See if you see anything that you've seen before. Target. Now, there's more. This right here is the first hour's high. And there's over, let me give you and you got to vet this for yourself. Statistically, there's approximately an 85%, I'm sorry, not right. One moment. About a 32% probability we get here. But here's what's important. The fact we didn't get the 32 and we're now inside of yesterday's range and we cleared the 60. The reason for the short in the morning was being under 60. If you get above 60 And we're above the 45, which was also a target coming down. It just turns the barge around. And now you're looking for this. And at this point, potentially to come out the top. So, because the first hour's high or low has a 97, almost 98% probability of getting taken out. So if we're trading now the long side, then we're looking for this to go and potentially, and this is not a recommendation, this, and maybe even come back to 86. So we are looking for coming out the first hour and then maybe taking out yesterday's high, because the shorts from yesterday are in here with buy stops, and that could take us to 86. Not a recommendation, but we'll watch it. And those are the trades. I mean, for me, it's primarily the whole thing today. What I have found, and this is an individual thing, you know. It's not, you know, Trader Lab is really about you. It's not about what I do. I just found for me that less is more. I don't want to trade a lot. I want to get on the swings, because this is where, for me, the payday is. And if I can catch this kind of rotation, if I take a stop, like I told you I took it wherever it was, took a stop, I think it was here. Yeah, if I take a stop and lose 2 points or something on it, or even 3, does that matter when I have something like this, you see? So I found for me, I'm going to pay to probe and be wrong. But I'm not going to risk 3 points to make 4 points. If I'm going to risk a certain number of dollars, I want to get paid for it. So it means I trade less, but it also means that when I get on something, I have better probabilities of getting, something more meaningful. So this is where I'm going on the longs. So I'm currently have a long. I guess I should show you the long. Still sitting in the long. I'm going to show you the current market so we can kind of see what's going on here and how this might work. So we are going for this because almost a 98% probability, here because there's buy stops, and here because it's a high volume area in the intermediate time frame. In other words, the market tends to be attracted to high volume in all fractals and time frames. So I want to show you this long. Well, this one you know about. But what about this? What do you do with this? Well, here's what we can do. This is resistance. This is support. 60 is below us. Resistance becomes support. So here's what I know. Let me just go a little further out here. I'm going to show you some fractals here just so you could kind of see how I'm looking at this. So right here, we have a counter rotation, and this is support. What happens? The buyers come here. We didn't even get here. So what's right here? Let's look at this. These guys were absorbed. How do we know that? Because the market went up. Not because we can tell right here. I have buy icebergs, and right here the sellers are in control. But the buyers are consuming these sellers. When I break here, right now, I have no clue. Just follow. Now the buyers are here. The buyers are here. What I need to have happen, and the sellers are here, by the way, is for this to break and come here. What does it do? It does the opposite. Buyers are in control. Buyers are in control. These guys are under the bus. Now let's look at the microstructure. There is the structure. And here's where it comes from. Right there, that node sticking out, that's the structure. And I'm above 60. I'm inside of yesterday's range. And this is called the low volume outside edge. I won't get into too much of this because we don't have time. But this suggests this is too low because we left it. And this is what's called a distribution. And we are still in the longs here. So this is a distribution. Oh, it's on sale. This is retail. Oh, that's too expensive. Let me just. So this is your outside edge up here. This is the low volume node. So I'm just going to draw a few of these things in here so you can kind of see what this is, how this works. Now, the thing to remember, we all take stops. We all don't know what's going on a lot of the times, or we think we know and we're not correct because the participants control the market. We don't. All we can do is control ourselves. And even then, that's not easy because we have conflict because we're dealing in uncertainty. So we have to constantly battle with our fear in order to actually execute. So outside edge, outside edge. Where's the outside edge? Micro high volume here, buyers in control. How can I get long? I can get long here, back to here. It's called mean reversion. I'm leaning on these buyers. And the idea is, conceptually, if the buyers were here and absorbed these guys, and the volume is here, and I broke away, I tested it, it's too low, and my buyers are in charge. If the market rotates, the idea is maybe these buyers here and here might come back in. That's why this line is here. So you could get long here, you got to scale here. Let's look a little further. Why does it come here? Because the buyers that are here, the buyers that are here, and the buyers that are here are still perceiving this as a sale. The retail price at the moment is here. The IB high, first hour's high, which has about a 98% probability, is hanging out up here. What's the prudent thing to do, statistically speaking, and it's all random, is get long. VPOC migration. Let's look again. Where does it come? Back here. Do you think understanding market mechanics might be useful? It's not so much that we can't predict anything, but when you have a tool like Bookmap and you understand order flow, you also can anticipate potential, and that's all you got in this business, maybe. Maybe if we come back here, these buyers who absorb down here are going to go, oh yeah, really? Come on, give me some more. Because that's what's going on here. Icebergs are buying. Sell stops are coming out, 157 stops. Who takes the other side? Icebergs. This is how the stop and iceberg detector can help you. What's over here? Sell stops. Thanks for playing. This is when your broker sends you a gift basket. Or if you're a gambler, you get the cocktails and the ticket to the buffet when you're in the casino. Sellers are here. Why didn't it go down? Absorption. Back up. And where are we trying to go? First hour's high. Which is here. And we tagged it. So if you're long here, you can scale here, you can scale there, and then you hold. Or, subject to your plan in the Trader Lab, it's long here and to there for the scale. And then you put your helmet on. So the thing is, in Trader Lab, and this is called mean reversion. This is a specific trade plan. So in Trader Lab, we have different trade plans. We have an overview of what the market might deliver in a random way, because who knows? So we know that before the market opens, as I showed you at the top of the stream. Then we stay in a narration to stay as best as we can in alignment with the market. And everybody gets out of alignment because it changes. So you could be looking at shorts and then the market is actually transitioning the longs, but you won't know it until you get stopped out. And then because you only have the past to know, but when you're in the present at the hard right edge, for all we know, this could be a short back to here, because it is actually, but it's not a short. What we have going here is mean reversion. So mean reversion is back to here, but we're looking for the market at some point to potentially get up here. Now, it doesn't have to, now, ever, never. All we might have done is squeeze out the shorts from today and get back to the retail price from yesterday. And I don't predict anything, so it's not my job. But for me, at the moment, I have stops. Let's think of the logic here. Where's the stops from the sellers? Here. So for me, this is a target for me, and so is this. This is like that volume point of control, retail, except this is a higher time frame. So the market has a tendency to come back for the stops and then maybe come here or not. Never has to, right? So this is the Trader Lab. This is kind of how you do your thing. Now, let's talk time frame for a moment. And if you have questions, please post them. And I'm going to come up for a moment and look at your questions if you have any. For lot, Tony, before you investigate NQ, nail it in the ES. Louis with the one lot, how are you? Louis with the one lot. Yeah, we haven't had Louis with the one lot in a while. If you listen to my previous streams that are floating around, I used to talk about Louis. Louis up here with the one lot, you know. So right here, the IB. Now we have a couple things in the IB. We have a couple trades here. And the IB is right under here, the first hour's high, which you know has a 98% probability. And I think we one ticked it. So that sets up two possibilities. A failure is one, and it's called the IBF, IB failure, and it can come back here. It's mean reversion. Now, here's where things get funky. Is it only a counter rotation and you want to get long, or is this the high of the day and the trade has failed? I should say the buyers are failing now. Or is it an opportunity to get long for a continuation trade? I'm going to tell you about a couple trades we have here, and these aren't recommendations. We have, since we have a target here, if we come out here, we have about 8 to 10 points to, or actually more, to our potential target here and here. So does that mean you get short, or does it mean you look for continuation long? What is your answer to that question? Now, it can be both, but remember, where is the potential opportunity? Is it a short counter rotation, or is it a long to go to targets because of market mechanics, which is buy stops are sitting here? Which would you take? Would you be taking the short? And this is resistance right here. Microstructure. I'm going to put this up here just so you see where the resistance is. Or would you just be sitting with your long because you're trading a swing to get the buy stops? This is what market mechanics is about. Where is the other side? Where's the fuel for the trade? If you're sitting short with a stop here, would you be using counter rotations to cover your short? Would buyers be using counter rotations to get long? See? So there's two sides in all fractals and time frames. You have these sellers, but who are these sellers? Are these new shorts? Maybe. Or are they just longs getting out? You see? What are they? Is this the high of the day? Or is it just a counter rotation? So as day traders, it's very easy for us to get myopic. Now, see, the thing for us is, who knows? Write that down. The best you got is maybe, and it's random. So in an uncertain environment, you are going to be triggered continually by your emotions, your fear and greed. All this is operating in our brain all the time because we're wired that way, you know. So our fear is that we're going to give it back. Our greed is that we're going to buy it here because of FOMO. Well, what is this? This is too low, remember? So we know the buyers, and there's a swing up. Sellers are here. I get a counter rotation. I should be sitting long from here and not doing anything except a scale up here. And now I'm going for 82, whatever, 81 to 86, okay? That's the trade. Now, that's Trader Lab. Now, suppose you're a short-term trader. You know, quote, scalp bear, if that's your thing. Not my thing, but let's say it was yours. How would you operate in this? where would you put your, if you get long, are you getting in there? Then your stop is here. Where are you going? There? Because that's, or here? Because this is resistance right here. So there it is. You get in here to go there. You get in here to go here. That would be your scalp because this is market mechanics. You'd be done here. Or do you go here? For me, I'm going here. Why? Because I'm going here. Maybe. When I say going, I'm targeting it. I don't know where it's going. It's not my job. So my other part of my job is to know if this is too low, I'm going to leave my stop down here because I got my scale here. Or I got my scale there and my stop is under here. And then my teeth are chattering. If I'm only running a 2-lot, then I'm looking for it to come out of here and get up, up here into 86. That's my trade. Now, right here is resistance. Let's watch it. Notice where we come. This is not coincidence. This is how the auction works. So what we don't know here is this too high? And we're going to come here and come under here. All this is possible. The market can rotate because that's what this is. This is a distribution. This is a big consolidation. At the high edge of a consolidation is this. Up here is the high volume, which is too high. I'm not paying that. We have to get through that to go higher. If we can't clear this, then we're coming here. That's what I know. I don't know anything else. If I can't get over that, I'm coming here. If I come here, I may come down there, back to this low volume. And I may just pick stops under here and then come back up here. I have to be prepared for that. If I don't get above this, then here. If I do clear this at some point, then this becomes support or the high volume structure over here, which I'm going to put a little line on for you. So if I break above this, this is going to be my support. This is support. If I can clear this. And if I can clear this, we have another structured trade in the Trader Lab. It's called the IB continuation trade. It's in those 60 PDFs. And this is not a trade recommendation because this could be tough. So if you get long here, look, everybody takes stops. So there's no magic here. It's just process and edge. The IB continuation trade, which is what it's called, in this configuration is a way to get on this trade for this and 86 or this. We might only get here or 86. So these are the targets. So this is the target on the longs. The IB continuation trade sets up here. Not here, on a break above and a pullback. And then your microstructure is going to be under here. So if I break up, I've got this is an outside edge and this. So this is my support. This is my resistance. Break above, potential check. Stop will go under here. And you put your helmet on. And it's not a recommendation. I always have to say that because you don't want to take my stops. And I take them. I take stops. I take stops. Are you guys tracking? How are we doing? Yeah, thanks, Louie. Mr. Lunary, thank you, thank you. Appreciate the kind words. Yeah, Chris, thank you. There's a link in the bottom of YouTube. It's a link to the Bookmap Discard Trader Lab community. There's no cost, but you do need to verify your email so we don't get spam in the community. And when you come to Trader Lab, it's a community. There's no cost. And this is not a plug and play process. This is actually, I consider it the real world of trading. Trading is not an indicator-based business. It just happens that as retail traders, we get these software packages and we think it's get the right time frame, the right mix of indicators, and then there's an ATM in the basement. Now I'm going to say there's nothing further from the truth. It's really very different than that. This is a gaming process. So this is a statistically based business. It's same as how casinos operate. So casinos don't try to predict the outcome of the next hand? They don't. They can't. So if they're not doing it, why are we doing it? Maybe we should use their process, which is proven, and emulate it, because now we're going to piggyback on a process that has a proven edge from a business point of view. And like the casinos, they pay the gamblers and they also give the cocktails and the buffet with it, and they still make a great profit, even though the gamblers get paid. So we're in the same business. We pay the gamblers too. And if we have a statistical edge, the same as the casinos do over time, not on this trade, not the next trade, not in any specific trade, we extract the dollars from the other participants in the market because we only get involved when we have a statistical edge. That's why having a 98%-ish probability to take out the first hour's high, which is called the IB, there, and there's the high, is why we would target this. Now, the high volume is here. If I can't clear the IB high, which would give me a continuation trade, then I have the possibility to come back here. In fact, that's what kind of happened right here. We came back, and we didn't tag this. We can still come here, here, and of course fall out the bottom. That is not our job. Our job is, we can't predict anything. So take that, write that down. Your job is not to predict. And I understand we all come into this business thinking it's about predicting what's going to happen. It is not about predicting. It's about maybe, it's about probabilities, and we're in a random environment with random rotations and random outcomes, just like the casinos. So if we can accept that, it changes our focus from curve fitting and predicting to operating with statistical probabilities. Remember what we're trying to do here. We can clear this. We have our next targets up above and 86, right? Now we're getting our IB. Now let's watch this. Let's watch this behavior right now. This is our continuation now. This is support is down here. This is a trigger. And now we're going for the, and it's not a recommendation. Let's see what happens here. Now remember where our long was. Losing my mind here, I got to remember. Here. Outside edge. This is our long. This would be our scale. This is resistance. This is support. If we rotate outside, this is where everything gets nasty. IB was a target coming up, and if I clear it, I have continuation. Where do we come, right? To the microstructure, to the microstructure, resistance, break high, structure is here. Let's watch it now. Support is here, and every trade is maybe. So let's watch. This is support. So if you get long in here, your stop needs to be under here, under this, and this. So let's see what happens. Questions? What do you see happening here? This is the outside edge of this distribution. There's going to be stops here because, and the high volume is sitting in here. So this, so stops are here. So if I come down, and this is where the outside edge is, I can pop this, get into this, and then rotate back up. That we'll see if it does that. If not, if we don't hold this, then we're coming here and the trade would fail. It's as simple as that. Let's see what it does. In the meantime, you guys have questions? Um, I'm getting a question in YouTube. Thanks. Would it make sense to put the stops further away? Uh, no, because if I come under here, other than a test, then I want to be out of the trade because I'm going to come here. So this is my area of support. So we have to see what happens in here because the buyers were here. So this is where the volume was, where the buyers took over. So I know there are buyers here and buyers here. So I really want this area to hold. Now you could keep your stop under here if you want, or you could keep it under here. So that's why this is here. And this is this outside edge. So if I come out here, remember, then I can rotate. So then what I need to do for this to go higher is, first of all, I don't want to get under here because then I'm coming here. If I do get under here, then this trade will take a stop. If I can hold this area, this, then I can get it back above here, then I can continue along. If not, then not so much. So let's see what it does. Buyers are here. These guys were absorbed. The buyers were in here. So let's see if they come back in. Sellers are here. There's the aggressor. So now we want to see if the buyers, and this is how I think of this. Why did this go up? Because there were buyers here. What about right here? I had a seller. What happened? The buyers took control. You see the behavior? So when I come down here, this is where my buyers were. This is my support, and this out here is my outside edge. I have alignment. Now, that's why my stop would be here. And I have no idea, by the way, that it was going to come back this far. So if I put a trade on, then I have to make sure, does the risk reward fit? Well, if my risk is here, what's my reward? This. So that's why it's a long. Are you guys tracking? Does this make sense? Yeah, hi. Thank you. How are we doing in YouTube? Can you guys see the logic and how I don't use indicators? So what am I using? I'm using participant behavior. The only thing an indicator does, it takes participant behavior and attempts to translate it in some fashion that you find usable. But I'm not sure what an indicator would be telling me, really. Would it tell me to get short here? Would it be telling me to get short here? And this might be a good short. I don't know. But for me, my plan, and win, lose, or draw, says this is support. And if I can clear this, then I'm on to my targets. Indicators don't do that for me. Do indicators get me short here, or do they get me long here, where we got our last longs? So not actually, there's long here, but this is a long. This is a counter rotation. The fact we don't get here is supportive to continuation. This is, and there's a narration that I do, and I share this in TraderLab. It's called "If This, Then That." If not, then what? If this is too high, if this, then that. Because that's back to retail. It's called mean reversion. If I don't get there, if not, then what? Then north. If this is too high, I can come back here. If this is too low, this is my resistance. So support, resistance. If I can clear this, and of course clear that, then I'm on to my next targets and above. If not, then not so much. So we're going to watch this together. I hope this makes sense, guys. Dan, I don't have a bearish scenario here with the current price action. I only have a bullish one. And the reason is the market is short from yesterday. We have yesterday's high that has buy stops above it. Now, we never have to get here naturally. That's part of the mystique of randomness. But if you were sitting short, there's a couple of things that might happen here. If you get counter rotations, you'll be using the short rotations to cover. So that puts support under this. The other thing is buy stops are here. So in my time frame, I'm going for this because I can afford to take stops. Don't like them, of course, painful, yanks the emotional chain, but the market mechanics suggest higher. So I don't have any shorts, so I would not get short. Doesn't mean the market won't go to zero. Anything can happen. So, but for me, the logic of the market is we tried to go down. 32 was a heck of a good target for me. This was my target for my shorts. I had my order. Remember, I was short in the morning. I had my order sitting just ahead of this, and not so much. So covered it, then have to turn the barge around. Took another short, took a stop, then got long. That's it. Can't do anything more about it than that. But to make it pay, this was a long. So for me, if I get long here, because I'm above my 60, remember, key, and I'm back in the range, key, and the basis for the shorts this morning was this being under here on the open. So that's why when I come back from the other side, long to there, and then this was the next target, 70, which I already explained. And if you guys missed that, then, come to Trader Lab. You will be able to review this if you're interested in it. There's no cost to be part of Trader Lab community. And these streams are available exclusively Bookmap Discord Trader Lab participants, as well as the library of webinars on the process. And everything's random. So the way you do this, in my opinion, is you trade with targets and you have trade management. If you get taken out of your trade, you just go on to the next trade. That's what you do. Absorption was here. There's the icebergs. And if we come out here, absorption was here. So I have support, buyers are here, and there's nothing saying we can't come under here or even come back here. If we come back here, then this trade will fail. And that's why this is resistance. So we have to get above this. So now we're coming under here, the sellers. So this trade looks like it might fail. We'll see what it does. So now are the buyers here. So this trade's going to fail, has failed in my book. So this would be a stop. Now, there are two trades in the Trader Lab. I want to tell you about them. There's this one, and this sets up a non-qualified reversion trade. There's this one, which we took as a continuation trade to go to the targets above. And there's another trade here. And it's called the IB failure. Now, for me, I don't take the short. I only take the long. And here we come back here. So right now, there's nothing to do here. Just sit. No trade. We have to watch this behavior. We have absorption here. So this is too low. This is too high. This is our range now. So there's nothing going on here at the moment. If I got involved on a long, this is my resistance, and I would not get involved. I'd just stand back. Take a stop, stand back. Or the or on this whole thing is right here. There's your support. This is the resistance there, the IB coming back the other way, and that sets up coming back here, mean reversion. So now we're in two-sided trade. We may get through here later or not at all. No way to know. This is the mean, and we also can come back under here to get the other side of this balance. So potentially come back here. So we'll see what this does. So right now I'm just in park. That's what I would do. Just sit in park. So there's no longs now. and we can come back out here. You guys have questions? A liquidation break? Not sure what you mean by that. Yeah, Phoenix, I cannot tell you how to get the cloud levels from Ninja, but if you come to Bookmap Discord Trader Lab, there are other traders in there who use Ninja. They might be able to help you with that. I don't use Ninja. So now we have our IBF, which is the mean reversion trade, and we have our outside edge down here. We have our VWAP here in our mid. Out here might be another trade, a long, to come back here and then potentially come out the top. So we'll have to see how that manifests itself. It's not a trade recommendation. These are structured trades in the Trader Lab. So we will see how this goes. If you're on the IBF, the short, which I did not narrate in here, but I know Trader Lab participants are on it. You'd be taking it here and here. And then you got to look if it reverts. Once we come under here, because there's stops here, if we get below this and there's stops under this outside here, and we have our 60, if we come back here and come back around, it sets up along to here. It's called mean reversion. So what we have going on here is a couple of things. We have the IBF, which is mean reversion, is back here. And then the other targets for it would be out here because of the swings, because there's stops sitting here. So you go for the stops, and then you're looking for this and maybe this. And then you have to see. So then, depending on what happens, you'd be looking for a long here and maybe out the top to get to the targets up above. And that might not happen for a while, because it's going in the lunchtime. But you can watch this, okay? So these are Trader Lab structured trades. So the short is a structured trade. I did not mention it. I was focused on the long and trying to narrate this for you. So didn't mention it, but it is in the Trader Lab. I'm sure there's Trader Labbers that are on this. And then we have this. So let's see what it does. Questions? By the way, if you guys are interested in the Trader Lab, there's a link in the bottom of YouTube. There is no cost to become part of the Trader Lab community. It's really a group of serious traders. It's about developing career paths and building out the business of trading. It's not a trade calling room. It's a waste of your time. If you can't figure this out and do it, then you're not going to be in the business. So in my opinion, the way to learn this business is to kind of roll your sleeves up, figure out what works. You can get a lot of that in the Trader Lab, but then you need to modify it or reverse engineer it to align with your psychology. Some traders are going to be very active. Other traders are going to be more trading this kind of thing. For me, I tend to trade this. So because if I do take a stop, it doesn't have the same impact on me as if I'm trying to trade from here to here because my risk is the same. Remember, this was our support, and we're looking for this to potentially get taken out and come down here. So we'll see what happens, okay? Remember, this is a swing. It's vulnerable. So let's watch it. By the way, I should mention to you guys, there is a free version of Bookmap. And I mean, it's not mentioned too often, which I really don't know why, but I guess it's for me to mention it to you. If you haven't tried Bookmap, there is a free digital version, desktop version, and you can try it out. It comes with data, and you can kind of get a sense for how an order flow tool might help you. The thing with order flow is this is not what most retail traders do. Most retail traders are into the indicator or the candlestick or whatever it is they're doing. And most of them don't have longevity, as you know. So one of the things I think that's pretty important is to take the experience you've had, your experience plus the experience of other retail traders, and learn from it. I call that trapped equity. We've all invested to learn this business. One of the problems with that investment is everything works sometimes because the outcome of any time you interact is random. So when you're in a random environment, you get winning trades. So that presents a problem because our belief then is that we're doing the right thing and that by tweaking and tuning or curve fitting, it's going to get better. Well, it never does. I call that trader Groundhog Day. In fact, I did a webinar on it. It's really important because that's what happened to me. I'd be doing things and I'd see them work and I think, well, I'm doing the right thing. I just got to make it better. Well, I had nothing to do with it. What it meant was just because it works doesn't mean it'll ever have an edge. Support is here, right? Who knows? So for me, there's nothing to do here. If I was short, I'm going to this, and then I'm going to manage my trade because I always have trade management. And this is really resistance right here, right here. This outside edge. If I come across here, the trade would be over. That's okay. See, now the logic behind this, now I don't know. Remember, I can't say where anything will happen. That's one of the things that I think is really important for traders is to know they don't know. You don't know. The only way you operate in randomness is with a plan, structured trades, and a structured trade management process. So when you come over this structure here, or even this one, if you waited on it, you're out of the short. So let's watch and see. So I don't have a long here. This would be a short. If you took the IBF, we have two trades here. One is a long here, and the other would be a short, which I did not mention here in this stream. And then it would be here. And down below, actually, this has more potential to it, but didn't do it. Here. So microstructure is here. This is called mean reversion. Outside in, outside in. So this is just slop right here. So there's nothing here for me. So I just go, what's going on? In the trader lab, if you're in the trader lab, you would have a plan. And you have to develop it, but there's a lot of templates and a lot of support from other traders who have plans. If you don't have a trade here, you don't take a trade. You just hang out, you know. This is our outside edge. This is our outside edge. We're in between these. So this is your outside resistance. This is your support. And we can come here. So for me, if I come out here, I'm taking a long. If I don't come out here, I got nothing to do. Just nothing to do. So I just would sit. If you think this is, it's not a video game, it's very much waiting. And a lot of us get very antsy because we don't want to wait. Well, are you going to buy this here? We could still come out here, or we're going to come back there. And I know it'll do one of them. I couldn't tell you which one or when or where. So for me, I have no trade. I just sit and wait. You guys have questions. This is just what it is. It's now it doesn't mean you can't develop more trades. What it is what I'm sharing here in the stream is really a broad stroke of market mechanics. And you really need to understand how the market works. When you're in a random environment, you are trying to make sense out of these rotations. So the idea of the auction is to understand what it's doing and why the market does this. Why did we come here? Well, why didn't we come down here? I can't answer that for you because there is no answer. It's just maybe. If I come back across here, where's my outside edge? It's up in here. So I can just rotate in here, and I don't know what it'll do. I do know if I come back above here, then I have the potential to go back on that long again to go for all this. So that's still part of this. But in the meantime, I'm just sitting. If you're interested, by the way, in the Trader Lab, you can use the link in the bottom of YouTube. There's no cost to become part of the Bookmap Discord Trader Lab community. There's 60 PDFs you can download of these structured trades. You can see what's going on here, as well as a library of webinars on the process. And the business is very much a structured business because we can't predict what's going to happen. So what we need to do is identify behaviors and then get in alignment with them if we can, and take stops when we're out of alignment. That's just the way it is. We're always going to take stops. So you have to kind of get used to that and look at it like the way the casinos do. Overhead, cost of production, not a personal failure. And the casinos do not predict the outcome of the next hand, and we cannot predict the outcome of the next trade. It's important that you understand that, because if you can accept that, then you're no longer in the business of predicting and being right. You're in the business of statistical probabilities and a random distribution of outcomes over a large sample size of interactions with the participants. That's the business. So if that's not the way you experience it or think that's what it is, then you're might be striving for something that is not attainable, and that is certainty. Something you need to be thinking about, I think. How do I see the POC moving down, Dan? Well, it just moved up here. So this is just volume. What this is doing is, this is the high volume or retail price. This is now too low. This is too low. This is the retail price. This is resistance in the more micro structure. There and there. So we are in balance. We're rotational here. So it's outside, and I don't have a trade here. If it came out here, I have a long back to here. But it didn't come out here. So I don't have a trade. I just sit and wait. That's me. But this is just bumping around. It just says now high volume is here, high volume is here, and we're auctioning this area. And what it's telling us is the highest volume for the day is right in here. So the market likes this area right now. They're doing a lot of business in here. This is too high. This is too high. This is too low. If I come under here, I'm looking at this to come back here. If I can't get back here, there, that's kind of bullish. What are you going to do? Then we're looking for it maybe to come up here. And if it comes out the top, I got to get on my long again. So that's what I know. So I don't know anything else. This is too low. And we didn't get there. What's interesting about the market, of course, is we don't know what it'll do. But wouldn't you think this white line, which is support, that there's sell stops here, and sell stops are right under here. We didn't get here. That tells us something. It tells us that the buyers are still aggressive because they couldn't get under here. So that sets up more preference for the long side, actually. So we'll see what it does, okay? So for me, this is my support. This is my preference. Preference means I have a structured trade here. And I got a variable high volume node here. I got to put that in. So for me, looking north. Whether it gets there or not, no clue. But this is pretty material. And I'm going to show you an advanced trade, which I don't like to narrate. If this is too low and this is retail, if I break over it and pull back here, this is an advanced trader lab long, and this is a long. This is the VPOC migration webinar that I did. And this is very advanced, and it's not a recommendation. Because this is what tells you that look at the buyers. Then this is moving down, but I cross above it. This is resistance. I pull back to it, support. And again, this is in the PDFs. It's actually in the webinar. And but this, I don't like to go into this. But I think you're in the stream to kind of get an idea of market mechanics. So this is too low. Let me mark it. Same process. What I do is process. So it's the same thing. It creates muscle memory and it's language. So if I understand the language, I don't know what'll happen, but I do understand this is too low. And if something doesn't happen and I see my buyer and I know this is retail, look what happened here. I crossed under it. Let's just do it from the other side. I broke under it here. This went down. I tested it. I went lower. What's the same? What's happening over here? I came above it. I tested it from the other side. I came below it. I tested it from the other side. Down. I came above it. I tested it from the other side. Up. Do you see it? You guys see what I'm showing you here? So this is suggesting higher. In the same way, this is suggesting lower. This is support. Didn't get there. Here's the buyers. Pull back, higher. So long or long. And now you're going back for the target that we were talking earlier. Get through this. We're going here. I'm not saying we're going there. So we might go there. And we're going here. Let's see what it does. Is this making sense? Now remember, we have the IBF or the IBC. I talked about the IBC. It took a stop. The IBF is the short. You have a choice there. It's up to you. For me, I'm only on the long side. So I'm not taking the shorts because for me, why? Let's go back to the why. Stops are sitting here. So this is why I'm trading the long side, because I know there's buy stops up here. And the market has a tendency to abuse whoever's on the wrong side in all fractals and time frames. And again, the market never has to go there, right? So we'll see what it does. And, if I run out of time, you can keep an eye on it. See what it does. Too high, too low. Potentially too low, right here. Test here, potentially too low. So for me, longs only. So there's a few things you can do here. When I was talking about the long, which of course took a stop, when we saw, and this is something that's really Trader Lab oriented, when you see the short, the IBF, two ways you can use it. You can take the short, mean reversion short, and you're going for this out here, or you exit the long, don't take the short, and use the short to get long, to get back in alignment, to come out the top. That's how I trade it. Other traders in Trader Lab are whirling dervishes. They're going to take a short to here, but for me, it's a long, so it doesn't matter. See, this is the beauty of Trader Lab. different time frames, or what's the term? Different strokes for different folks. So, but this is where my long is, here, and then out the top. So this is Trader Lab. Now, how you slice and dice it, it's up to you. And everybody takes stops. Those tire marks, tread marks on your back, you get those if you've been doing this for a while. I'm going on 45 years. So I've got more marks than I care to think about. But I found for me that I have to be willing to take a stop. It's the cost of entry. I call it buying a ticket to ride. And the idea in Trader Lab is that you get risk neutral. In other words, get a scale. If you got long here or here, but let's say here, and the reason is because of this, but let's say you got here, then your job is back to the IB for your scale. Now you have no risk on the runners, and now you manage your runner. And this is Trader Lab minimum configuration. And we're going, remember, here, and if we get any momentum on the stops, up to here. Let's see if this plays out in the time we have left. I got about 8 minutes. And if you have final questions, please post them. Well, the micro consolidations are just a way for me to keep track of the behavior. They're little auctions. So I draw them based on the behavior. So, for example, this is support. Now, I know when we came down from here, this is resistance. If I'm putting a trade on, now once I fall below here, you see the behavior? That's resistance. When I come above here, this is actually support. I could draw a line here, but I put something out there. You could do the same thing. This is support. The volume is here. As I'm coming through these, that's resistance because we had our sellers here. And then, wherever. So I draw the lines for you, not for me. I draw them because it shows a change in behavior. That's why I put them here. So that's support. This is resistance. Sellers took over. So when I come back the other way, then I'm going to look at this because my sellers were here. And if I get long here, I'm going to be looking to scale. Now I know the market is short, so it's scale. Then I'm just holding or wherever. Does that make sense? That's why I draw the lines. And I take them off too. So now this is the IB continuation trade. This is the one that I was talking about before that got stuffed. Well, this is the same trade, except now potential to go higher or not. So let's see if this one works. So this is your long and this is your resistance. Break high, this becomes support, this area. So let's see what it does. So I'm using these from a few different angles. Resistance becomes support. You see? Does that make sense? A phoenix is? Hope I got that right. By the way, if you're in YouTube and you're finding this interesting, please give a thumb up. And click the link in the bottom of YouTube if you'd like to visit the Bookmap Discord Trader Lab community. It's no cost. And you can download these 60 PDFs of these structured trades that I'm sharing with you. They look like this. And this is the same kind of stuff, I'm not a vendor. This is not a course specifically. It's based on Trader Lab processes, and this is called auction market theory. How does the market work? Why does it do what it does? And how at times you might get in alignment with it. So this, you can download these. You need to come to Trader Lab. Use the link in the bottom of YouTube if you're inclined. And there's also a library of webinars in there and a great community of serious traders. Trader Lab is built on the idea of integrating order flow with the auction. In other words, how does the market work? And the market works on participant behavior to discover what's too high and what's too low. The other part of the auction is squeezing out who's ever on the wrong side. So if we look at yesterday's high, that's the wrong side. Now, we don't have to get yesterday's high. We may never get there. That's not the point. The point is that if the market was short yesterday and we had sellers this morning, which sets up the squeeze, then if we squeezed out the morning sellers and we have shorts in the market from yesterday, that's why it sets up coming out here. And the high volume in the intermediate time frame is there. So I can squeeze these guys out, and this sets this up. And there might even be more here. Let me take a look. Well, for me, this is where I'm going. I mean, I don't know if it's going there. I'm saying this is where I'm headed. So this is my target, and then I manage to trade. Get taken out? Sure. Whatever happens, happens. So let's just keep an eye. Please give a thumb up if you're visiting in YouTube. Come to Trader Lab if you're interested. Look forward to seeing you there. So let's see what happens here. Our buyers were here. This is important. We want to see the microstructure here. We want to see. Now remember what can happen. I can come here. I can come here. No way to know. Just no way to know. Last long was, well, that's aggressive. But once you knew this, see, there's resistance. But when this shifts up, that's a Trader Lab structured trade. And then you have micro high volume here. Let's put a little line on here. What I'm doing with these lines is I'm just this is an auction. This is let me show you what else it is. This might be more familiar. This is a consolidation. Sellers are here, buyers are here. Sellers are here. Right now, buyers are here. The volume is here. This is too high. Down here, same thing, except it's the buyers. So right here, if I can't get above this, I'm going to potentially come back here. If I can clear this, this is my resistance, then I can come out the top on my merry way. So let's watch the behavior. This is a consolidation. This is resistance. Let's see. And how do I know it's resistance? Buyers were absorbed here. They didn't get anywhere. You see the delta. There's no buyers up here. Sellers are in control. They didn't get above these sellers. Sellers are in control. Buyers are trying here. What happens right here is going to kind of give you the idea. Right here, are we doing this, or are we going to push through and go to our target above? That's as deep as this gets. So with this structure and this little white line, I'm actually seeing an auction. And the sellers took control here. Here's resistance. And I'm out of time. So you guys keep an eye on that. Please give that thumb up on the way out. Helps the stream. Use the link in the bottom of YouTube if you'd like to visit the Bookmap Discord Trader Lab community. There's no cost, and it is a serious community of traders building out the business side of trading. The idea being to create career path. And past performance, of course, is never indicative of future results. But if you do the work, I think you're going to have a reasonable chance at developing something different for yourself. And of course, you have to do the work, and your mileage will vary. Thank you, guys. Don't forget the thumb up, subscribe to the channel, and visit the Trader Lab. Remember, there's a library of webinars in there, those 60 PDFs, and the Trader Lab community. And in addition, Bookmap offers a lot of additional education at no cost. Stocks, options, crypto, order flow with a high-tier tool like Bookmap, options, market maker behavior, algorithmic behavior, and tons more. Take care, guys. Thanks for visiting at Trader Lab. And Trader Lab, I'll see you in the lab. And don't forget our targets. Yesterday's high for the current longs and 86. Have a great day, everybody. And as we say, thanks for visiting the Trader Lab. Remember, resistance and our targets are here and here. That's the basis of the longs. Thanks, guys. See you tomorrow.